It's Tuesday and we're taking a technical view of the markets, and today we're putting BlackBerry and Palladium in the spotlight. Our guest for this week's edition of Technical Tuesday is J.C. Parets, president and founder of Eagle Bay Capital. He's also editor of the technical analysis blog allstarcharts.com. J.C. joins us from New York. Good morning, J.C. Thanks for joining us.
Thanks for having me. How are you?
I'm great, thank you. We're going to kick it off with BlackBerry. We've got a chart that goes back to 2011. You're quite bullish on the stock. So is the street this morning. The stock's up about 7-8% in Toronto. We're looking at this chart. We've drawn in a couple of lines. What's this tell us?
Yeah, it's funny, you're talking about all the optimism on the street today. It's amazing how sentiment shifts after a nice move. A couple of months ago, you couldn't find a BlackBerry bull anywhere. So we came into the year, we loved BlackBerry, we thought it could double in price, and just the recent price action over the last month, the nice consolidation, the recent breakout above the 200-day moving average, to me, it gives me that much more conviction. I still love it. I think it could double again from here. I think you could see 18 to 20 bucks.
We're going to show that other chart that you showed us with the 200-day. When you see a stock like this, give us a little education. When we've seen, I mean, it's not straight up, but it certainly had a big move higher. It's trading now right around that 200-day. It's certainly broken above it, but a lot of kind of consolidating around it.
Yeah, and that's pretty standard behavior. We had a monster rally into that 200-day, and us technicians, we call that a bullish flag. It's a very healthy correction. It's necessary, and this week we're breaking out to new highs. And I think that the move that originally got BlackBerry to this level can be replicated from here. And, as we were saying, money is flowing into BlackBerry, and it's flowing out of shares of Apple. So I think that the BlackBerry-Apple ratio can double again as money continues to flow out of Apple and continues to flow into BlackBerry.
And we have that chart here. This is a relative chart of one against the other, and a rising line on this chart, I'm assuming, is BlackBerry outperforming Apple.
Yeah, absolutely. And, us as human beings, we're very emotional when it comes to our stocks. And a lot of people made a lot of money in Apple for many, many years, and they're stuck with that mentality and think that that's going to continue to be the case. So those emotions that we have as human beings, that's a fault of ours. We're trying to continue to take advantage of that. I think Apple is dead money at best. It's probably going lower, and that money's going into BlackBerry very aggressively.
It's sometimes fun to capitalize on those emotions. Nat Gas, you sat in that chair. I was in this chair. I've used this phrase so many times. I just absolutely love it. It's the rip your face off trade. We certainly have it, or have had it, from $2 to almost $7 really on the near future. What are you doing with natural gas right now? I think you're out of it.
Yeah, well, Francis, I mean, we have our targets for a reason, and for a long time, I was coming on your show and you and I would talk about it, and our last target was $6.40, and there was a very good reason for that. There was former resistance from a couple of years ago. It's also the 38.2% Fibonacci retracement from the natural gas crash after Hurricane Katrina. So that was a big level for us, and I can't say that I'm surprised that natural gas is down 25% in a little over 24 hours since hitting that level. That's, welcome to the world of natural gas, right?
Just a broader perspective, though, because we're looking at that chart, 100% retracement takes you higher. Do you think it goes higher after kind of mucking around here and this pullback and some of the fast money gets out?
Yeah, structurally, I still like it. Structurally, I think there's potential, but for us, there's just way too much risk to be either long or short. I think the last couple of days have proven that. So for now, we just get out of the way, let the dust settle. Day traders and guys that are really leveraged, they want to play around with that, go for it. It's not for us.
However, on the other hand, looking at Palladium, we don't talk a lot about Palladium. We have a graph. I think you are quite bullish. I'm not going to use that phrase again, but that same phrase for Palladium.
Yeah, I mean, when you look at Palladium, and you said it, Francis, nobody's talking about it. And I have a funny feeling that it's going to be the topic of conversation throughout the second quarter, maybe the third quarter, once this thing starts making new highs. This is one of the strongest metals out there, yet it's the forgotten metal. You know, it's not gold, it's not silver, it's not Dr. Copper, it's palladium. So it's kind of like just there in terms of, you know, conversations amongst investors. But once this thing gets going, and I really think that it can, this is one of the best setups that I see in any market out there in the entire world. I think once we start breaking out of this consolidation, we can see about 300 points. We have a target of 1150 from these levels, and that's a long way up.
It certainly is. I just had to swallow hard on that one, on palladium. The other one that I know you've been bullish on, just following your Twitter account, is corn. We're going to take a look at it as well. I remember you saying something like you're even eating nachos all the time. You're so bullish on corn. Put corn into context for us.
You know, I came into the year, I really liked corn, I really liked coffee. We saw what coffee just did, up 60% year to date. I think corn can do something similar, maybe not that dramatic, but I see 30% upside in corn. It's one of the cleanest charts out there. There was key resistance around that 400 level back in 2010, and corn prices have come crashing down over the last couple of years. Talk about a forgotten commodity, and the market found support at former resistance. It's very standard stuff. I mean, this is textbook polarity principles that we pride ourselves on. We found support, and now we're rallying. I think we got 35% upside in corn. We're looking at about $600 target. A
lot of excitement in the things that you've shown us. We're going to end on a relative chart, the TSX versus the S&P 500. The TSX underperformed for 3 years. So far this year, we're outperforming just by a little bit. What does this relative chart tell you about the performance for the S&P TSX?
It's interesting, you know, I look at Canadian stock markets relative to U.S. stock markets, and there's a lot of commodity exposure in Canada, so it kind of plays into that same thesis that we have in commodities. Remember, year to date, commodities are the big winners so far, right? Commodities up 8%. If you look at an equal weight index, Treasury bonds are up a little bit, and S&Ps are flat. So I think that's the big story of the year is commodities. And if that particular ratio of Canadian stocks versus S&Ps breaks that 7.8 mark, which is what you and I have been discussing, I think there's a lot of upside in the relative performance of Canadian stocks over U.S. stocks, which is fascinating because U.S. stocks are some of the strongest in the world. I love them relative to anything else, but Canadian stocks can take those reins, and I think it's going to happen soon. JC, there are going to be a lot of traders in Canada that got their fingers crossed for that after 3 dismal years. Thanks for joining us this morning. Always great to hear your thoughts. Thanks for having me. JC Parets is president and founder of Eagle Bay Capital and editor of the technical analysis blog, allstarcharts.com. He joined us from New York. You can find him on Twitter as well.